Good morning, everyone. I'm Catherine Ross of TheStreet. I'm here at the NYSE with Jim Cramer. Jim, how are you?
Things got nasty with Faber.
Yeah, what's going on?
Well, I mean, look, a lot of times before the show begins, we joust.
Yeah.
But when he starts jabbing me with the red pen, it hurts.
He really got you this
I know,
time.
he really got. I'm gonna have to throw this shirt away. But that's the way Faber plays it. It's not how I play it. I reasoned with him. I just tried to talk to him. No.
You're the nicer one.
No, I'm stand-up. Stand-up ever since I became like Gandhi 2, back bigger than ever.
All right, Jim. How are the markets looking in your eyes?
Bad.
They're rallying.
I mean, here's the problem. We live in I'm not going to go back to my old socialist workers' day, but we live in a society where when you have 3.7% unemployment and you get 250,000 people, rich people decide, well, this is going to really hurt our purchasing power. Rich people who run Wall Street say, okay, well, Powell is going to have to raise maybe 4 or 5 times, make it so the short rates are higher than the longer rates, make it so that CDs are 3.5%, and that is bad for stocks, and that's a very competitive rate. Now, obviously, I had Don Wood on last night, the incredible CEO of Federal Realty. He was talking about which is better, the 3.5% of Federal Realty or 3.5% from a CD, and the 3.5% from Federal Realty is far better. That's the largest shopping center REIT in the country. But we live in a world where we're still using old metrics. When I took Otto Eckstein and John Kenneth Galbraith for economics at Harvard, they believed that anything like 3.5 would be the equivalent of guns and butter, like the Vietnam War, Johnson period, and that we're going to have dramatic inflation because you can't have full employment. And that analysis is still, all these years later, with all the digitization, all the things that the Salesforces do and the Apples do, how many jobs were wiped out by this, okay? So we could sit here and we could say, you know what? We are going to be short labor, but then we look at all these icons. These icons all represent jobs lost, okay? And I'm not talking about factories that the Chinese targeted where whole towns have nobody and there's opiate addictions rampant. I'm talking about these. So I think that Otto Eckstein, when he was talking to me about this kind of thing, when John Kenneth Galbraith was talking about unemployment, those days do not take into account this. But the Fed is not up to date. And so you're going to get a market that can't sustain any sort of upward movement here because people are going to say, you know what, a combination of Apple being disappointing, which by the way it wasn't, and the 4 rate hikes that have to happen now are going to drive stocks lower. So that's the world we're in. I'm not where. Look, there's 2 ways to look at it. If I were short, if I were a hedge fund, this is nirvana because we have been up big, and now we know the Fed has to act. As someone who is trying to hire workers at our new restaurant, the Longshoreman, it's hard. You know, you have to pay people more, and maybe people who are less capitalized won't be able to open up places. But when you listen to Kevin Johnson, whom I interviewed on Starbucks, what he's talking about is, frankly, listen, you pay people more, you send them to college, you give them health care benefits, and they don't leave. And if they don't leave, you don't have to reach. So you don't have to do bounties, like Union Pacific has to do bounties. So I think that we have to accept the fact that there's 2 worlds. There's the Wall Street world, which just says people are making too much money if they're making, a couple pennies more over the year. But they can make billions. And it rankles me. I'm not running for office, but it rankles me.
One of the interesting things.
What is 3%? We gave corporations a gigantic tax cut. It wasn't to buy back stock. It was to pay workers more. So now they're paying workers more, and that's wrong? I don't get it.
Doesn't quite add up.
No, it doesn't.
It's really interesting to me that with the jobs number, and I'm glad that you brought this up, restaurants are actually higher. Like, they added a lot of jobs this last month.
Yes, and that's good. I mean, look, like we're trying to hire dishwashers, so we'll pay $16 an hour. You can pay parolees who got out of prison who sold marijuana because it's legal. You can't. You can automate as much as you can. McDonald's has automated a lot. You can digitize. When you bring in these a workday, you actually are able to not have to hire so many people. We're short 50,000 truckers in the country, and that costs money to bring the food to the restaurants. We hire 50,000 truckers, and we get oil down year over year, and the tariffs cycle through. We're going to have a discussion that's very bullish, but we have to get from here to there, and we're not there yet.
One thing
I've once tried to drive a truck. My friend Michael Haley's a good truck driver, and he showed me, and it's, you need tremendous arm strength to go all those gears. I mean, boom. It's not a young person. It's not an old person's job. It's a young person's job.
I had no idea.
Yeah, it's really hard. But young people don't want the job.
Yeah.
Catherine, they don't want the job because they read about what Waymo's doing at Alphabet. They know that if you have to do a route, let's say you have to do a Dow Chemical route, where you take it, the plastic, the liquid, to the plastic, to the forming, to the shipping, that's a route that's traveled every single day. Why can't we have autonomous vehicles? And the answer is right now, because people don't want to look over and see a truck that doesn't have a driver, but autonomous vehicles are safer than people. So I am telling you, these problems will be solved, but the Fed has no patience because they are using the old rules. I think all of the Fed should go to Silicon Valley like I do 4 times a year, and they will see the things I see, and Catherine, they'll be dazzled, but they also won't be so quick to raise rates. All I'm saying, I'm in favor of rate hikes. I want a December rate hike very badly. I'm just saying, wow, wouldn't it be great if we did the rate hike and then we waited a few months and see whether anything happened? See, I represent prudence. Only on Wall Street is my view reckless. Everywhere else in the world it would be prudent. Because, see, when you're rich, you don't know what it's like to not have a job. And when you're rich, you don't know what it's like to live in your car. Having done both, I can tell you that it's nice that jobs are plentiful. Let's keep it that way.
That's some great insight there.
Let's keep it that way.
I really want to talk to you about Apple, which I covered live on Twitter last night. Of course, we're going to have to hold this. Thank you.
Okay, let's talk. I mean, I had my conversation with Luca and Tim. I get to have a really very nice conversation with them right before the report. And I was saying, as someone who used to manage cash for companies, that what they ought to do is just earn money because the Fed keeps raising rates. Why not just sit on that cash and produce income? And Luca Maestri, the CFO, who's such a brilliant guy, said, why should we do that? It's much cheaper for us to buy back our stock here. Now, there's 2 narratives. There's the narrative of the CFO, who's so good, saying, listen, we're going to buy back stock. And then there's the narrative of Wall Street with the lowering of price targets said, which is that business is slowing because of the guidance, and not only that, but because they're not going to break out the different the different product sales. That means they have something to hide. How did I come up with the own it, not trade it? Because there's so many days like today where everyone's dumping Apple. Every smart guy's dumping Apple, and they're laughing at me with the own it, don't trade it. Like they did it at 150 when Buffett came in. Like they did it at 93 when I had Tim on. Like they did it at 50 when I started talking about how great the iPhone was. And like they did it at 25 when my daughter said, listen, Dad, I need a second iPod. And so they're doing it again. And I said to you yesterday, you remember what I said to you about Apple? What I said?
You said that if it doesn't beat, then it's going to bring the market down.
Right, and I also said that don't buy it.
Yeah, you did.
I said don't buy it. Let them be disappointed, which they are. They'll usually be disappointed for a second day. It might rally at the end of the day, but not with the way I think because of the Fed Fund stuff. But I said wait because I said it wasn't set up right. It was coming in too hot. And there's a group of people who are itching to downgrade it because of China worries. China was actually quite strong. The actual issues that were bad were Russia, Turkey, and India. India was bad. If we want to focus on something, India was bad. They still don't have a government that allows us to sell as much as we'd like there. But Tim Cook is fabulous. And now you can say, Jim, you say it's not about friends, it's about money, all right? Is Mark Benioff my friend? He came to invited to my wedding, so obviously I guess guilty, right? I mean, we do some charity work together. I think Tim is a remarkable executive, and yet here we are again, our usual couple times a year ritual of thinking that he doesn't know what he's doing, and those who think he's not what he's doing, I encourage you to sell. I encourage you, if you think Tim Cook doesn't know what he's doing, you should sell, but don't watch me. Waste your time.
All right, I'm gonna have to pause you there because I want to continue this more on our Action Alerts Plus.
Pay versus the free people. The people who pay for like the 48 hours a day that I work for the club. That's all right. Sure, sounds good.
All right, thank you for all of your insight. I'm so excited to talk about. I'm so excited to talk to you more about Apple because we've got whole notes that we have to go through. All right, guys, thanks for joining us. I'm Catherine Ross of The Street. Have a great day.